Cryptocurrency. It's a term we've all heard, and yet with Bitcoin having turned 13, the first and still most popular cryptocurrency, it's yet to achieve mass acceptance. Reactions range from belief in its potential to forever change our monetary reality, to mild interest, confusion, and downright distrust. In this episode, we chat with Marius Reitz, the General Manager for Africa at cryptocurrency investment platform Luno. From its humble beginnings with 10 employees in 2016, Luno now incorporates 1,000 people across 4 continents, all of whom, like Marius, are on a mission to upgrade the world to a better financial system. Marius fills us in on the practicalities of cryptocurrency, how it works, how to start, and where he sees this cloud-based finance phenomenon heading. I'm your host, Erica Liebenberg, editor at JustMoney. Hi, Marius. Thanks so much for joining us.
Hi, Erica. Thanks for the invite. Great to be here today.
Absolutely. Marius, cryptocurrency is a bit of a hot topic at the moment. It's popping up all over the place in social media and in the traditional press, but it's relatively misunderstood or not well understood. How would you describe cryptocurrency to someone who knows little or nothing about it?
In a nutshell, the idea behind Bitcoin was created in 2008, and it's contained in a white paper, which explains the vision for Bitcoin. But in a nutshell, Bitcoin is a new electronic payment system where no single person or entity is in charge, and where anyone around the world can use it. You can almost think of it as cash, to some extent. For a cash transaction, the other person, the counterparty in person, and you conclude the deal with the cash payment. It's peer-to-peer. There's no intermediary between you and the other person processing a cash payment. So you can think of Bitcoins almost in a similar way. It's a payment system between you and another party without an intermediary or a central authority like a bank and having authority over that payment or processing that payment. And so, it's unlike any other tools that currently exist. Bitcoin is the world's first digital peer-to-peer payments infrastructure. And of course, Bitcoin is just one of thousands of different types of cryptocurrencies. Bitcoin was the first cryptocurrency to come into existence, and that's why it's the most popular and the most widely adopted and accepted cryptocurrency. But there are many others, thousands of others, of which some unfortunately are scams. Different cryptocurrencies solve different needs or use cases. For example, Bitcoin is most versatile, so Bitcoin can be used for transfer of value, or it can be used as a store of value. So it has a value and it's able to retain its value over a long period of time. But then you get other types of cryptocurrencies like Litecoin, for example, which is a version of Bitcoin, but it's more effective and efficient for payments. So it's cheaper and faster payments. And then more recently, you get stablecoins, which is a type of cryptocurrency that is pegged to a fiat currency, such as the US dollar or the euro. So it has some of the properties of crypto, meaning that it can still be transacted peer-to-peer without an intermediary. And intermediaries, of course, slow down processes in most cases, and they also charge fees. Right? Different types of cryptocurrencies, but the premise is that it's digital and it's peer-to-peer and it's decentralized. So it's not controlled or issued by a central business or central authority.
Okay. So you've mentioned some fairly significant benefits there. The fact that it's decentralized, that it's not slowed down because there's no bank or intermediary involved, and also the issue of fees. And of course, in South Africa, we pay staggeringly high bank fees, and the banks are often under fire for it. And in fact, South African banks make most of their money, as you would probably know all too well, off their bank fees, which is quite unique in the global context. So those are 2 significant benefits. Would you say that those were your motivation for getting involved with cryptocurrency, or what was your motivation?
Yes, to some extent. So at the time, I just finished my accounting articles in Cape Town, and I had an interest in finance and also in technology. So I got the opportunity at Luno to join Luno's finance team. And so from there, and my motivation behind that at the time was to join a global business. At the time, Luno had operations in Nigeria and Malaysia and Singapore and a couple of other global markets. And Luno had also at the time just raised funding through NASDAQ. So I knew there's something big behind this, a change in the way in which we think about money potentially. And so, of course, I was curious, right, and interested. And so I took the leap and I joined Luno's finance team initially. And from there, sort of worked my way, typical startup fashion where you join the startup and then you end up, working across multiple different departments. And then at the early stages, I started taking ownership of Luno's operations in Nigeria. So I had the opportunity and the privilege to travel to Lagos, Nigeria, interact with cryptocurrency users on the ground. And interestingly, people in emerging markets or regions like Africa, Southeast Asia, where the financial infrastructure is fairly underdeveloped, where there's large percentages of the population that's still financially excluded, people tend to become innovative in the way in which they utilize their money or in which they find ways to get things done. And so, not surprisingly, in Africa and other emerging markets, you'll typically see higher adoption of cryptocurrency than in developed markets, because people are almost to some point necessitated to explore different ways of making payments, especially migrant workers, or different ways of trying to retain value in countries where currencies devaluate. So I then started working with people on the ground, and then I started to see how it can change people and benefit people. And I think from there, just the interest started.
I can hear that you're looking at this as a new graduate and you're excited. You can see this burgeoning field. And what I'm hearing as well is the amount of problem solving that it offers. And I know, for example, there's a lot of immigrants into South Africa, but even here, when someone's got a work permit, trying to organize a bank account is so difficult. Trying to get money across the border is difficult and expensive. And so I can absolutely see where cryptocurrency would take off. And I think it's that broad scale adoption that a lot of people are waiting to see. If I invest in Bitcoin, am I going to be able to spend it? Is it going to have utility? So the next question would really be, so far so good. It sounds amazing. It sounds like it's solving a lot of problems. But what would you say are some of the biggest risks of cryptocurrency? Have you encountered any risks? And if so, what did you do to resolve the situation?
Yeah, I think a couple of risks, right? Actually, many risks. I think firstly, the technical complexity behind it. For most of us, cryptocurrency is still very technical, and we are almost too scared to dip our toes into it because it just seems overwhelming. And so specifically around a couple of things, for example, cryptocurrency transactions, meaning if you send cryptocurrency to another person, it cannot be reversed. And that's for a very specific reason. It's a security mechanism, right, to prevent things like chargebacks and payments being reversed. And a lot of businesses in the traditional finance world struggle with that. So a lot of customers, open Luno accounts and they transact, and then they, erroneously send crypto to someone or to an address, and then that crypto cannot be recovered unless the other person on the other side is willing to return it back to you. The second one, especially from a retail investor perspective, now we're still in an asset phase, so most first-time crypto holders typically buy crypto from a speculative or investment perspective. And very few really have got a plan when they purchase crypto. Am I holding it short term, speculate? Am I holding it for the long run? And so a lot of people entering as speculators, when this price starts to drop even 1 to 5%, that FOMO kicks in and people then think the price will continue to drop. And so that's where you see these massive sell-offs and 10-20% swings during a week. So it's volatile, and you need to decide, are you willing to accept any losses? Or are you using funds that you're willing to lose? And if you're in it for the long run, then I always want to say, you shouldn't even look at the Bitcoin price, because it will move up and down over a period of time. And then another risk, really, and I think all of us are faced by that, is that of scams. We see that across the traditional banking system. We're being peppered by SMSs seemingly coming from financial institutions asking us to share our login details or item numbers. And so for crypto, it's the same. Crypto is still new, and I think a lot of scammers and criminals are trying to take advantage of that fact. And so that's why they target the mass market without proper crypto knowledge. And so a lot of customers, unfortunately, fall prey to scams, where they are tricked into, that they've been promised guaranteed returns, for example. And so during desperate times, people will unfortunately fall prey to that. So very important that firstly, you need to do it yourself. No cryptocurrency business is regulated in South Africa at this point. So if you want to buy crypto, do it yourself, spend the time, learn the ropes, and start small. And don't let any expert or any person trade or buy crypto or invest crypto on your behalf, because firstly, if they do so, they're not allowed to do it because they're not licensed or regulated to do so. It's a mixture of technical expertise, which will come with time, price volatility from an investment perspective, and then also scams.
Of course. And Marius, let's take the example of something like Bitcoin. So you've mentioned, obviously there's a lot of scams out there, but Bitcoin is obviously almost like the poster child. And if I understand correctly, it's been well guarded to the extent that, there's a certain amount of Bitcoin. There will never be more Bitcoin than that. So, strictly speaking, it's not going to devalue rapidly unless everybody jumps off. But let's say, so if somebody invests, let's say in Bitcoin, they get cold feet. At this stage, are they guaranteed that they're going to be able to get not their money back necessarily if the value of Bitcoin has dropped, but they'll get something back? So let's say this is now real grassroots for those amongst us who understand nothing at all about Bitcoin. But I purchase some Bitcoin, I get a bit nervous, I see things are going up and down, I want to sell some of it off. Am I guaranteed that I am going to be able to sell that Bitcoin, that there are going to be buyers? Is that the current climate of cryptocurrency? But I guess it also varies per type of cryptocurrency.
Correct. It varies per cryptocurrency. And I think it all comes down to the supply and demand. Each cryptocurrency has its own supply and demand. And, there's also no global price for cryptocurrency. So on Luno in South Africa, based on the supply and demand for cryptocurrency in South Africa, on Luno has a Bitcoin price in South African rands. And then similarly overseas in other markets, on companies such as Coinbase or Bitstamp, they have their own supply and demand and their own Bitcoin price. So, but yes, to come back to your question, at Luno, we try and offer cryptocurrency coins to customers with, firstly, a good track record, but most importantly, with sufficient liquidity or adoption globally. Now, when customers buy crypto, it should be as easy to sell their crypto as it was when they bought their crypto initially. It has to be liquid. Now, Bitcoin has a market capitalization of $450 billion US. It's traded across the world on hundreds of cryptocurrency exchanges, locally as well. So I think if you purchase Bitcoin and you wanted to sell your Bitcoin holding, any given day, it would be easy for you to do so if you are doing it through a reputable platform. If you are buying and selling cryptocurrency on peer-to-peer markets, then maybe it's going to be difficult. But if you use a Luno, for example, it should be fairly easy. But as I mentioned earlier, there are thousands of different cryptocurrencies. Some of these cryptocurrencies promise the moon and they solve specific problems, but they're not tried and tested. They've got no track record. And so what happens is buyers or investors lock in, they purchase unknown coins without a track record. And then when they want to sell these coins, they can't find buyers. If you are new to crypto, I would probably advise you to start with Bitcoin. It's got the biggest market capitalization. It's most widely accepted cryptocurrency globally, and it's probably the most regulated cryptocurrency as well. So yes and no, it can be difficult, but if you buy the right coins on the right platforms, then there should not be any issues.
Okay, so that would really be a first piece of advice, I guess, for someone who's starting out on the cryptocurrency journey. They've seen the hype, they're not sure about it, they may be a little bit anxious. It sounds like an intermediary like Luno is really the way to go, because it's going to make, if I understand correctly, it's going to make the purchase process easier, it's going to make the selling process easier, and you guys are dealing in currencies that are viable, that have liquidity.
Yeah, correct. We offer 8 cryptocurrencies currently. These cryptocurrencies go through a rigorous vetting process. We look at everything from security to the use case, which problem is it solving, to market adoption globally, looking at regulations, will it contribute any regulations locally. So many different factors and considerations before Luno decides to list a specific coin to its customers. But I think just over and above that, right, we're a company of just over 1,000 people now. We are based across 4 or 5 continents, and we've built the business almost in a similar way to a bank, in terms of how we focus on compliance, the security of customer. One of the things we do as well is we perform audits or verifications on customer funds on a quarterly basis to prove to our customers that the crypto that they own in their Luno wallets is safely accounted for in the back end. These fly-by-nights and scammers don't safeguard their customer funds, and so it's vital for people to do their research. Take 10 or 15 minutes on Google, do Google search, see if you can find the founders or the directors of the business, read up, see if you can find them in media interviews, ensure they've got a local company incorporated in South Africa, and look on the app stores for reviews to see what other users are saying about them before you decide to invest.
Well, that's excellent advice. And it then begs the question, to me at least, why then do people try to go out on their own? If we know that there's scammers, there are checks and balances that need to be done, what would motivate someone to go on their own?
I think firstly, all of us, to some extent, overestimate the level of knowledge of the general public, when it comes to finances and investments, right? So we all expect someone to be able to conduct their own due diligence, to conduct their own research, but most people won't know where to start. For most people, thinking of money and finance and managing your finances is very difficult and complex, right? And they don't even go there. They don't want to think about it. So that's why continued education by the Lunos of the world, we have the responsibility to continue to educate the public and our customers on the risks, best practices, how to protect yourself from scammers, how to stay safe, and what you can do. And there are a lot of things that we do on our side to safeguard customer funds and customer information. But what can the public do on their end to also, keep themselves safe? And things like using unique passwords, not using the same password across all your accounts is maybe a good start. But I think ultimately, we've been in very, very difficult economic climate globally and in South Africa over the last 3 years. So I think people are desperate, and unfortunately, during desperate times, people are probably more prone to fall prey to scams. But I think it's that, plus it's coupled with the fact that crypto is new, and there is still this myth that that the price will only go up. And I think that is also contributed to the whole thing that, people think that they will only make money, and it's not too good to be true.
Marius, tell me, from a risk perspective, is there any chance whatsoever, without us getting too technical, because I think the word blockchain puts fear into the hearts of most people that have dabbled along the edges of cryptocurrency, but is there any risk at all from a technical perspective? And I'm not now talking about the scam currencies and the pyramid schemes, but for something that's as well established, for example, as Bitcoin, or perhaps not quite as well established, will there ever be a way to hack the blockchain or to create more tokens? To create more of the currency, thereby diluting the currency? Is there any technical risk?
There are different blockchains. So different cryptocurrencies operate on different versions of blockchain. So it's potentially possible for a lesser known cryptocurrency with no adoption and with no real security and use cases to be hacked. But from a Bitcoin perspective, there's this one thing called the 51% attack. And that is where 51% of nodes across the entire Bitcoin network, if they agree to join forces at the exact same time on the exact same day, then there could potentially be some changes. But technically, I won't call it a hack, but I can say that altering of the rules perhaps. But it's highly, highly, highly unlikely.
And in any event, I guess, and again, please correct me if I'm wrong, but with the checks and balances that you, for example, at Luno are doing and other good intermediaries are doing, you will have a record of what people hold. So even if there was some kind of hack-in attack, you'd at least have some kind of account of what people are holding.
Absolutely. It's similar to a bank ledger. So we also keep track of transactions. We keep a track of customer account balances. And so you read about cryptocurrency platforms being hacked, but that is 100% because of inadequate security measures implemented by that company, and not necessarily the Bitcoin or the cryptocurrency that got hacked, but it's the platform that got hacked because of inadequate security they had in place. So again, maybe as part of the process that you go through to find a safe platform, most platforms that are reputable and safe should have on the website a section where they explain the security processes they follow. So also trying to familiarize yourself with that to ensure that they actually have the know-how in terms of how to safeguard your funds.
Okay, that's great. Interesting that the offline storage concept, because for something as technical as this, you sort of think of it, it's a cloud-based system, like it's an entirely digitally based system. So the idea of pulling it offline just for that document storage, it's interesting in a way, but it makes complete sense. As you say, it's out of the reach of hackers. One of the things that I've seen that has kind of been mentioned is increased regulation. So for example, taxation, countries are talking about, to a greater or lesser extent, regulating cryptocurrency. If that happens, firstly, I guess it's a two-pronged question. What would the consequences be? Because if it becomes a regulated system, are we not back to square one in a sense? Where we've got intermediaries and, there's checks and balances and, information has to be given to SARS. How do you see that unfolding?
Yeah, that's a good question. And I think you need to firstly consider the risks that regulators are trying to address or mitigate through regulation. I think firstly is money laundering, right? So money laundering happens on a daily basis through cash, through normal fiat money, through physical goods, through many different things, but also, unfortunately, some people also use cryptocurrency for that. So the first thing I think is What they're trying to address is money laundering. And secondly, they're trying to protect consumers from operators or platforms with little or no regard for the safety of consumer information and consumer funds. So what it comes down to is regulating the cryptocurrency platforms as opposed to regulating Bitcoin or Ethereum or the individual cryptocurrencies. So you can think of it in a similar way as, financial service providers. They're regulated by the Financial Sector Conduct Authority. They have to obtain a license, and by obtaining the license, investors or the public can then assume that they have to go through a rigorous license application, and they have the processes and the controls in place to provide that service and the expertise to provide that service. So what we're seeing globally across most markets, and there is a clear theme for regulation, but also likely in South Africa, is that the initial focus will be on the, as we call it, the on-ramps, the platforms that enable you to convert your rands into cryptocurrency. And really, there will be no impact on the consumer, other than the fact that they will have to provide their basic KYC information, such as the ID number and the ID document and the proof of address, which Luno already complies with. So there would be no change from a Luno customer perspective when the FCA declares crypto financial product and Luno has got to apply for a license. And and I think also globally, if you consider countries like Malaysia, Singapore, the focus has also been on regulating the platforms, not regulating cryptocurrency. So we'll have to see how things play out, but I think people will always be able to take control of their own crypto. You don't have to store your cryptocurrency on Luno. It's just, because it's still new and a lot of people don't know how to take self-custody, but it is 100% possible for you to transfer your cryptocurrency from Luno to your own private wallet, and it's almost, we call it a hardware wallet, and it looks almost like a memory stick. There's no counterparty risk. It's not sitting on a platform. You've got full control over your crypto. So now people will still have the freedom to do that, regardless of regulation or not. But it is important, that we ensure that regulation is purpose fit. And so being in the market for 9 or 10 years now, that's the role that Luno is playing to ensure that we share our expertise from other markets.
Okay, so those benefits of speed of transfer, it is immediate. Am I right in saying that when you do a Bitcoin transfer, it's done? It's immediate, no matter where you are in the world.
It's not immediate in the sense that it takes 1 second. Right? It can take a couple of minutes still, but compared to remitting funds from South Africa to Europe, it can take anything from 2 to 4 days, I guess. Right? So you can say in that context, it's immediate, yes.
And, obviously then the fee issue falls away, the banking fee issue falls away. So even with regulation, those two things should remain unaltered.
Yes, yeah, it should remain unaltered, yeah.
So those benefits will remain. So really what I'm hearing is, there's sort of two uses in a sense. There's people that are using cryptocurrencies on a day-by-day basis to actually make purchases or to send money to loved ones, for example. And then there are folk who are investing in it. But what would you say the split is at this time, or is it impossible to say?
So currently, we are definitely still in what we call the asset phase. And that's where the vast majority of people enter the crypto market as investors or speculators, and they buy crypto in the hope that the value will appreciate and they will make money in the short run or the long run. And so if you look at cryptocurrency like Bitcoin was created as a peer-to-peer electronic payment system. But in order for people to start using it, it had to have a digital scarcity, right? And that's why only 21 million Bitcoin can ever be in circulation. And something that's scarce and that has a demand, in the long run, the price should appreciate. So Bitcoin was created like that, so that you can almost think of it as digital gold. Imagine gold is scarce, cannot be counterfeit, cannot easily be duplicated. And so Bitcoin is very similar in that sense, but it can also be used for payments. So in order for people to use Bitcoin for payments, there has to be a certain level of adoption in order for the network effects to kick. Think of the email back in the early 1990s. Very few people or businesses at least, sent out their invoices, via email, because not all the suppliers had email accounts. Similar process now. If you can't send Bitcoin to your friend or to your colleagues or to your customers or your debtors, why would you then try and do that? So we have to reach that point of the critical mass point where it becomes easy for us, in our everyday lives to send someone else Bitcoin. And so for that to happen, we need more people to open up crypto wallets, to own crypto, maybe as an investment. And then in future, if the option presents itself to pay someone or to go through a paywall on a news website or to receive Bitcoin quickly for someone for a payment, then you will probably do that, right? Because now you're familiar with it and you own it already. But we're not there yet. I think it will take a couple of years and maybe regulation to give people that little bit more comfort to say, listen, the industry is regulated, there's some control, and I'm more confident to purchase my first crypto.
It's an interesting point that you make, because I think, obviously, as you say, it was created, Bitcoin, as a peer-to-peer payment system. And some of the early adopters, I'm assuming, I know that you say it's still in the asset phase, in the speculative phase, but there must be a good number of people that are using it. In fact, I know of one young gentleman who uses it to send currency to his family in Africa. So there are those users, definitely. Do you see cryptocurrency fully replacing traditional finances at some point in the future?
No, not necessarily. I think there's a lot of talk that crypto will replace banks, and I think what we're currently seeing is we're seeing a hybrid market where people that use fiat currencies like the rand for specific reasons, but they also use cryptocurrency for other reasons, right? Maybe where the rand can't serve their specific needs, or in conjunction with the fiat currency. So I think people will always trust centralized authorities or central banks. There will always be that need for trust. And it will take decades, if not 100 years, for that change to happen, where people operate in a fully decentralized manner. Maybe we will reach that point in the future. But I think for the next couple of decades still, you'll definitely still operate in a hybrid world where people use both, but for different reasons.
Makes sense. Marius, are there any parting pieces of advice that you would give people who are interested in cryptocurrency and perhaps looking at investing?
I think firstly, you start with the most well-known coin, and that is Bitcoin. There are other repeatable coins as well, but I think Bitcoin's the oldest. It's got 45% or 50% dominance, meaning that over 40% of the global cryptocurrency market cap, which is just over $1 trillion, consists of Bitcoin. It's the most liquid, which we discussed earlier. So I think that's the first one. Start with a well-known coin like Bitcoin. Start small. You don't have to buy one Bitcoin worth 360,000 Rand currently. You can buy 1 Rand with Bitcoin only now if you wanted to, or 10 Rands. Start small, but enough for you to remain curious, I think. And then I would say play around. That's the only way you will learn. So ask your friend to open up a Luno wallet. Send them some crypto so that you can see how the transaction works, how long it takes, how cheap or expensive it is. Ask them to send Bitcoin back to you. And so learn how to do payments, test it out, right? That's the only way eventually that you will learn. And then lastly, remain curious and read up. There are a lot of South African media publications, MoneyWeb, they cover crypto content almost on a daily basis now. So a lot of local content that should give you further insights into the local crypto market, its growth, its use cases, and so forth. Yeah, I think you have to start small.
And any hot hints for people that have been investing for a while, that are looking for the next big thing, that really could be the next big thing from a cryptocurrency perspective?
Look, there are so many different coins, and it's difficult even for me to keep track of the growth and that's happening or that's taking place. There's a lot of hype around NFTs, non-fungible tokens. We've seen some of those projects come down crashing because of the hype. A lot of interesting developments in decentralized finance. Things like, especially on the lending side. So, for example, imagine someone in Africa, emerging Africa, they own a little bit of crypto because they're now connected to the internet, and they were able to purchase some crypto or receive some crypto as a payment. But they don't own assets, they don't own any property, so they can't stand loans to fund and grow their business. So what we're seeing is different use cases being developed on that front. People being able to borrow fiat currency with crypto as collateral, for example. So just imagine the impact that can have across African markets, with a lot of first-time investors and first-time holders. So a lot of interesting use cases. I can't single out specific coins, unfortunately, but if you don't own any crypto as of yet, then I think, as I said, start with the big one, start with Bitcoin, and then from there you will be able to spot all the new up and coming coins as well. But I would probably say stick to Bitcoin.
Fabulous. Marius, thank you so very much for your time. This has been super informative. Really, really appreciate it.
Awesome. Great chatting to you. Thanks for the invitation, and I look forward to chatting in the future.
Whether we're in or out, keen to invest or not, cryptocurrency is steadily growing in popularity. While it remains mainly an investor's game, the opportunities to buy and sell mainstream goods and services are increasing. A get-rich-quick scheme it isn't, but what it does present is a relatively new, untapped and forward-thinking investment opportunity. Do your research, and if unsure, stick with reputable intermediaries who can help you to invest more securely. Thanks for listening, and be sure to catch our upcoming episodes on Spotify, YouTube, and SoundCloud.